Hey guys, welcome to another episode of Tax Talk with Joel, and in today's episode, I'll be covering 20 tax write-offs you don't want to miss as a business owner. Being able to write off business expenses is probably one of the biggest tax benefits that we get as Americans. Fortunately, W-2 employees are not able to write off job expenses. However, the moment that you become a business owner, you'll be able to write off anything that is considered ordinary and necessary to run your business. This includes everyday expenses like your cell phone or internet bill. But before we get into the details, let's start by explaining what a tax write-off is. A tax write-off is a reduction of your income. For example, let's say that as a business owner, you make $100,000 a year, but you spend $3,000 on your cell phone and internet bill. That would mean that your income as a business owner is now $97,000. What I love about transitioning from a W-2 employee to a business owner is that a lot of expenses that you're already paying for become tax deductible. Most people are already paying a cell phone and internet bill, but these expenses are only deductible when you're a business owner. These expenses will be your best friend when you're just starting out in business, because if you have enough write-offs, you essentially can pay $0 in taxes. I still remember the very first time I experienced a tax write-off, and it felt amazing. I was working as an accounting and finance manager for The Man, a real estate developer, and I always had a passion for numbers, taxes, and accounting, but I knew nothing about business. I didn't know how to market, sell, or operate a company. That's when I started learning about entrepreneurship. I was listening to podcasts, reading books, and investing in courses. But even though I was gaining all this knowledge about business, you actually don't learn much until you apply it and practice it in real life, right? Well, I started doing tax returns for friends and family on the side, and technically, a side hustle is considered a business in the eyes of the IRS. So the moment I started my side business, I realized I was able to write off business expenses. And this was cool, but when it really hit me was when I planned a vacation. There was a business conference and it happened to be in Las Vegas. Well, I invited my wife and I attended the business conference during the day. And then at night, I went out and had a great time with my wife. This was the first time that I got to experience writing off my vacation. I was able to write off the hotel, the parking fees, the dinners, all while I was there, and I realized how amazing it was to be a business owner. But where most business owners get confused is that they believe that a tax write-off is a dollar for dollar reduction of their taxes. This is incorrect. A tax write-off, as I mentioned, is a dollar for dollar reduction of your income. In my previous example, I mentioned that you made $100,000 as a business owner and you spent $3,000 on your internet and cell phone bill. Let's say you also decided to take a business trip and you spent another $5,000. Well, that would mean that you now have a total of $8,000 in business expenses. Does that mean that your taxes also decrease by $8,000? No. Your income decreases by $8,000. To find out how much your taxes decrease by, I would need to know your effective tax rate. Let's say that your effective tax rate is 15%. Well, you would basically take the $8,000 in business expenses and multiply that by 15%. This means your taxes decrease by $1,200, not $8,000. So don't make the mistake of thinking that a tax write-off is a dollar for dollar reduction of your taxes. If you want to be sure, I recommend speaking to a CPA like myself to help you make smarter business decisions. So now, the moment we've all been waiting for. What are the 20 tax write-offs you don't want to miss as a business owner? The first one is advertising. Any expenses related to promoting your business are 100% tax deductible. The second one is your automobile expense. With automobile expenses, you can deduct either mileage or actual expenses. One or the other, not both. Even though only one of the two is allowed, I recommend tracking both so that your accountant, like myself, can decide which one is best for you. To track miles, I recommend subscribing to Mile IQ. Mile IQ will track all of your daily drives and provide you with a log in case your tax return is selected for examination. On the other hand, actual auto expenses would consist of gas, parking, car insurance, tires, repairs and maintenance, car washes, and depreciation. To keep track of actual auto expenses, I recommend using an accounting software like QuickBooks Online. The third expense is insurance, like general liability or workers' comp insurance. The fourth expense is meals. Now keep in mind that meals are only deductible if you're with a client, an employee, or the meals are for the general public during, say, a marketing presentation. I recommend writing on the receipt who you were with and what was discussed, and then taking a picture of your receipt inside of an accounting software like QuickBooks Online. The fifth expense is travel. For travel to be deductible, there needs to be a business purpose for the travel. If you're just traveling for vacation and there's no business purpose, then it will not be deductible. The sixth expense is commissions. For example, referral fees paid to partners are deductible. The seventh expense is contract labor. If you hire outside help, for example, this is deductible. But keep in mind that you will need to 1099 any contractors at the end of the year to be in compliance with the IRS. The eighth expense is dry cleaning and uniforms. For this to be deductible, the clothing cannot be wearable for daily use. For example, scrubs for doctors would be deductible. However, there is an exception. If the clothing is wearable for daily use, then it will need to have your logo on it for it to be a deductible expense, because now it can be considered a form of advertising or marketing. The ninth expense are dues and subscriptions. For example, fees paid to an association in your industry. The 10th expense is interest expense. An example of interest expense would be interest paid on a credit card that is used exclusively for business. The 11th expense is your cell phone bill, as I mentioned earlier. Just make sure to only deduct the cell phone lines that are actually used for business so the IRS doesn't disallow this expense. The 12th expense is your internet expense, which I mentioned earlier. The 13th expense is professional services like fees paid to an accountant like myself, which is my favorite tax deduction. The 14th expense is licenses and permits. If you have to pay a fee to the city, the county, or the state for a business license, this would be deductible. The 15th expense would be cost of goods sold. If you're selling a product like t-shirts, for example, you can deduct the cost to buy or make those shirts. The 16th expense is rent. If you have to rent an office or a shop, for example, that would be 100% tax deductible. The 17th expense is continuing education. If you're required to take training courses to keep up with an evolving industry, that would be tax deductible. The 18th expense would be supplies. If you have to purchase any products or tools to be able to do your job, those expenses would be 100% deductible. The 18th expense would be repairs and maintenance. If you have to pay for any repairs to fix any of your tools or equipment, for example, that would be tax deductible. Keep in mind that fees paid to a service repairman or handyman would also be required to receive a 1099 at the end of the year for you to be in compliance. And last but definitely not least, the 20th expense would be office expenses. If you purchase a laptop, for example, that would be considered an office expense. Also, any software needed like QuickBooks Online and MileIQ, like I mentioned earlier, would also be considered office expenses. We did it, guys. These are the 20 tax deductions that you don't want to miss as a business owner. Keep in mind that this is not an all-inclusive list. These are just 20 deductions that you don't want to miss out on. Again, anything that is ordinary and necessary for you to operate your business is considered a business expense. Now, despite all of these deductions, a lot of business owners still end up overpaying in taxes. How? Well, it's because they aren't maximizing these deductions. And the reason for that is because they don't have a good accounting system in place. How can you remember every tax deduction when you already have a lot going on as a business owner? It's practically impossible. You need to have a good accounting system in place to really take advantage of all of your business expenses. And the best tool for that, in my opinion, is QuickBooks Online. I'm not sponsored by QuickBooks, but I'm plugging it because this helped me a ton as a business owner. QuickBooks allows you to easily connect your business bank account to the software so that it automatically pulls your transactions. That way you never miss any. Not to mention that you can also invoice your customers and take pictures of your expense receipts all within the software. It really is a great tool that will help you account for all of your expenses and will make your life more organized and simple. So hopefully you guys learned something new today. If you're a business owner and want to know what other expenses you're missing out on, or if you need help getting an accounting system in place, we are offering a free tax assessment, which you can book by going to sandovaltax.com/YouTube. You can find the link in the description down below and use it to schedule yourself in for a free 15-minute discovery call. Again, if you found this video useful, please like, comment, and subscribe. And if you want to be notified of when I upload new videos, go ahead and hit the bell as well. That's all for today. You guys have a great day, and I'll see you on the next video.